Hello, hello, hello. How's everyone doing? Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino. How is everyone doing? Good afternoon, Davey. Bob's not here yet. Good afternoon, Patrick. Hello, Lauren. George, let's go, Bob button. You don't even want me? Oh, oh boy, I feel so rejected. Happy Tuesday, Connor. It's just already rooting for the Bob button. People are bored with the mic. So, all right. Well, we got CPI tomorrow. That's the big day. Slight little pullback today. Excuse me. So let's just take a look at stuff before we get Bob on here once he shows up. Hey, Waka Waka. Hey, Waka, are you on vacation yet? When's your vacation starting? We got mortgage applications, so we'll just see how that is. But the housing market's already pulling back, so that's not going to be much of a surprise. But 1 hour before the open, we got core inflation, yada yada yada. So that's going to be the big number that everybody's working off tomorrow. We'll get Bob's thoughts on that once he jumps on here. Then the only other stuff we really have is for crude traders. And I guess if you trade gas, you have the numbers coming out at 9:30 Central, but everything tomorrow is going to pivot off the inflation numbers. Do we drop and buy, or what's going on? Let's see here. So, real quick, pretty mixed day. Tesla down a bit, Amazon down, Google down, Meta down, Microsoft. Chips took it in the shorts. So payment processors got a little hit, but banks were some strong, and oil continuing its little rally based off the snapback rally in crude. FOMC 67% for the 75 basis point, and we're still pretty much at neutral gamma territory. I peeked at Coinbase. Is Coinbase still down? I didn't see their exact earnings, but I was looking at that. Had not had a chance to look at Roblox yet. But if anybody else wants anything, let me know tomorrow morning before the open. Again, everything's CPI. There's not a lot that's really market moving beyond the CPI that I see in here. And so with that, now you've all requested it. You think the Waka Waka is going to have the hot core inflation? Bring it on. Hey, Josh. 2 days left. We'll miss you all. Then Waka Waka's on vacation. Won't be back till start of September. So there we go. We'll miss you, Waka Waka. Does NQ close count as close in rotation zone? We will take a look at that. But first and foremost, because we've got so many requests for it, the magic Bob button. There he is. Now I can go away.
What are we talking about here?
We're talking about whatever you want to. Well, all right. Any thoughts for the CPI numbers tomorrow? Any thoughts based off this market action going into the CPI?
Yeah, so my thoughts are CPI matters. So there's that.
Thank you. We're done with Bob. CPI matters. There we have it,
That's it.
folks.
Talk to you guys tomorrow morning. No, I think it's obviously there's going to be a little bit of relief. I think everyone expects it. I expect it. You can see a little bit of relief in the year-over-year number, but I think people will be surprised at two things. Number one, the core. The core could actually outperform, since the things that have fallen have been food and energy for the most part. You look across the spectrum of things like wheat, soybean, corn, crude oil, even natural gas has weakened from where it was. So you could see a drop in the headline, but my stance remains the same. It's tough because I come on here every 2 days, and as we approach the CPI, my stance remains the same, that it's not going to matter that much. If you look at the core, which is supposedly what the Fed looks at, we can get an 8.3, 8.4 year over year, which would theoretically be a beat. And then we're going to get a core that's going to come in really, really hot. Now, I don't necessarily mean it's going to come in at 6.6 or 6.7. The expectation, I think, is about 6.1. I just mean that's going to be a really tough thing to tame. Once you've tamed food and energy, which the whole reason there's a core is because food and energy is volatile, right? So once you've tamed that, the rest of it becomes a mix of things that are not volatile. So if they're not volatile to the upside, they're not going to be volatile to the downside. So what does that mean if something's not volatile, guys? It means it either grinds up, grinds down, or moves sideways. None of those are good for the perception of what the Fed needs to do. So I suspect that today's selling, I did not see a ton of volume. Admittedly, I stopped paying attention at about noon. I guess it's possible that volume picked up in toward the end of the day, but I suspect it was wishful thinking longs like a Coco or a who's the other guy that says things always go up?
Tom Tom?
Getting out, yeah, getting out of things that didn't go up. I suspect that's a lot of what today's selling was, just on the index and sort of the ETF spectrum of things. But it's a couple of crazy things happen. So, and this is outside of CPI. So the pipeline issue with Russia, right? I don't know if you guys saw that, but the Druzhba oil pipeline goes through Ukraine into Europe, and Ukraine shut it off. Like Ukraine stopped it in the Ukraine, basically because they could not get paid because Russia couldn't pay them due to them being squeezed by the international sanctions. So I don't mean to chuckle. It's just, again, this whole thing about people who have never run a business running countries. They took Russia off the international payment system. So when Russia tried to pay transport fees, 6 months worth of transport fees to Ukraine, they according to reports, according to Reuters, they tried to pay it and the payment wouldn't go through. It basically bounced because Russia is not allowed to do transactions on the international payment system. And Ukraine certainly doesn't want a big bag of rubles, right? So Ukraine shut it off to Europe. So now it's actually, they're sending money and weapons to Ukraine, but Ukraine was kind of forced to shut off more energy supplies to the EU because they can't get paid. That's a story of unintended consequences. So you saw a little bit of crude oil bump up on that. There was also in the Kazakhstan oil field in Kazakhstan. I don't know if I'm saying the name of that oil field correctly, but I think it's called Kazakh. I don't know. It's Kazakhstan. That's what I'm going to call it. Kazakhstan oil field had a gas leak, so they had to shutter it basically. And that's another 300,000 barrels a day. But all of Russia's crude oil is going to China and India at anywhere from a 13 to 19% discount from where prices are now, which if you look at the crude oil, the rise in crude oil prices, that's more than Russia was getting, not only before the war, but before that. Crude oil started rallying months and months and months before Russia even started building up troops. So they're selling it at a discount, but they're selling it at a much higher price than it was pre-invasion, including the discount. So there's no real shortage of oil. Prices are going down now. I have a little story for you guys. I had a friend who was I played football with him. He was about 262 pounds. After football, he ballooned to about 515 pounds, right? Then he decided he was going to start losing weight. And he got down to about 398. And everybody was telling him how great he looked, how great he looked. He still looked like crap compared to when he was 262. A few weeks later, he had a stroke and died because he was too heavy. All right, I made that story up. But the numbers I just used were gas prices. Gas prices prior to the run-up were about 262 a gallon. They were even lower than that, but I didn't want to go back that far. All right, and then they went up to 515, and now they're about 398 national average. And the administration trumpets that this is some sort of victory when they're still almost double where they were in 2019. So even though I think the food and energy component of CPI is going to drop substantially, I shouldn't say substantially because the vast majority of this drop happened in the tail end of July. So maybe there'll be a revision as opposed to being in there now because sometimes the data doesn't come through. I suspect the headline CPI is going to come out somewhere right around the expectation, maybe a little higher, maybe a little lower. I feel bad for the markets if it comes out higher than expected. But the core is not likely to budge. So that's my CPI rant and my made up weight loss story.
All right, George asked Bob on the Futures Edge episode, you favored CPI taking the S&P to a 200-day average. You sticking to that?
Taking it up to the 200-day, yes, I think that's what's going to happen. Now, from a perspective of that, I was looking at the chart breakout. Well, the chart breakout didn't really hold. I don't want to go so far as to it failed. I'll leave that to Mike. But I thought we were going to break out above those June highs. And then I suspect that CPI would be the thing that would either break us out of that, or then I thought we would break out above it, test it, and then CPI would take us to the 200. I'm not feeling terribly strong about that, although the rotation zone is still holding. So yeah, I'll say that I still think that's the driver that could take the S&P up to the 200. So yes.
Well, I'm not thinking that's going to happen tomorrow, but I'm thinking after we get through this next whatever move
Sure.
from these numbers this week, we'll get another push higher before September. And again, because we judge everything on the closing basis, and it tried to pop above there and close back down. Still
Yeah.
caught in consolidation.
Yep.
Uh, AB
Hey, I
market
got to tell
inflation
you,
may have
I got to tell
peaked.
you guys
What
real
was that?
quick. I just had a light go out, which likely means one of my fuses blew. There's been storms like crazy here. If I lose power, I'll probably come on tomorrow during or after CPI, just so you guys know.
All right, market inflation may have peaked for the year.
I mean, sure. Headline
That's
inflation? I don't think so, honestly, but it could have, but it doesn't matter, is kind of my point. Because again, this is a rate of change thing. Maybe I'm like, do you know how to find the CPI index on Fred? Just type it in and put it up, and it might be more clear as to what I mean.
yeah. Hold on, I gotta adjust some things. Wasn't. Oh boy, there we go. Hold on. Why don't you keep talking while I'm.
All
What
right. So
do you want me to
basically,
look for?
just the CPI, Consumer Price Index, on Fred. There'll be a chart. You should be able to get a multiple bunch of years of it. Um, the fact of the matter is that even if CPI peaked, you're talking about the rate of change peaking, not CPI. CPI stands for Consumer Price Index. Now, again, this is very similar to pivot. These are words that market participants use on TV and on YouTube shows. We use them too. When I say CPI has peaked, okay, people tend to think that means CPI is going to head lower, but the CPI is an index. Okay, it's not like the S&P 500 index. When you say the S&P 500 index peaked, you expect it to go lower. Okay, which Mike just put up on the screen is the consumer price index. Okay, it's a number. Where is it, Mike? If you run your mouse over where it is now.
Uh, 295.328.
Okay. So if you look at how often CPI actually dropped, it's basically during recessions or just after recessions. Otherwise, it is constantly going up. It never really peaks. So what was that number again, Mike?
295.328.
All right, 295.328. If it goes to 295.528, the change in the CPI that we're going to get tomorrow will be tiny, but it will still be positive. So the consumer price index isn't peaking. Okay, so if somebody says to me, you think the consumer price, the CPI has peaked? No. Are you asking me if we've seen the highest rate of change, meaning that 9.1% is the most it's going to go up in one reading during this particular stretch of time? I'd say probably. But the CPI itself is going to keep going higher. So that's what you guys have to be very careful about. And you should tell your friends and family when they said, well, CPI peaked, it's coming down. It's not coming down. Okay. I don't know, Mike, if you have the ability to draw on there, but coming down means it's headed down. It's not heading down. Not this number, not the next number, not for the foreseeable future. It's going to continue to head up. It's just going to be going up at a lower rate. Okay. So
The
that's what's going to be happening.
the slope is going to change, you're saying.
Exactly. Notice the slope was very steep. Okay. The slope was very, very steep. The slope could flatten, but it will still be still be an upswing. Does that make sense?
Let's see. Let's see. Let's get back through. Options 22 says hello. Hey, Ted. Let me catch up with stuff. Let's see. What does a CPI track? Connor's asking.
I mean, a lot of stuff. It's sometimes easier to talk about what it doesn't track. So it doesn't track stocks, bonds, the cost of a life insurance policy, but it tracks the cost of durable goods. It tracks the shelter costs, which it tracks very poorly. If you know how they do shelter costs, they actually call people who own homes and say, "What would your house rent for?" That's literally how
Which
they
is
track.
asinine.
It's asinine, dude. It is absolutely asinine. Apparel, transportation, medical care, the cost of recreation, so like your gym costs, education, and communication equipment. Okay, so it's a basket of goods that the Bureau of Labor Statistics considers to be a representative basket of the things a consumer might buy over a period of time. But there are a lot of people out there. Eric Weinstein, one of the most respected, he works for Teal Capital, and he's got a PhD in mathematics, says that it's a ridiculous measure. He says it doesn't measure what consumers feel or pay for at all. A lot of people say that. That's above my pay grade, to be honest. I don't know if it reflects what consumers buy or not. I do know that when CPI is up, people tend to complain about how much things cost. The two things seem to correlate. So,
Well, AB just put in, I'm in the service sector. In the last 2 years, the number one question was, are you available? Now the number one question went back to, what's the price?
mm. So they would pay anything then, and now they won't pay anything. Is that what you're saying, AB?
Well, now they're
Now they're
what?
trying to
I mean,
shop around for a lower price. I'm
geez.
assuming that's what
I
you're
mean,
saying.
was at Costco yesterday, ground beef up another 30 cents a pound.
Wow.
It's just every time I go, it's crazy. It's crazy, I tell you. So we sort of beat. We'll just have to see. So can you come on tomorrow morning?
Yeah.
Perfect. Well, then we'll get your thoughts tomorrow morning. Anything else you want to touch on?
No, not really. I think that's the big thing. I will say this: the yield curve.
Oh yeah, I was going to ask you, but I see it. I'm I'm getting old. Look at the yield curve. Oh, you want to tend to? I mean,
I'm just saying, we talked about this before I heard it on any news channel. Then all of a sudden it was on, and I'm not saying they watch us.
they
I'm not
must
that.
watch. They and
I'm not.
where's they're not giving me shout outs.
I'm not that arrogant. But we talked on here about how we're at the lowest levels. We surpassed the levels of 1990 or 1989, and we're at the lowest levels since 2000 now on the yield curve. Um, we're going to go lower than 2000, I think. And as per Jimmy Iorio, I looked at this a little bit, and I think he's kind of right, although I think he was guessing. The depth of the inversion doesn't really line up with the length of the recession. I haven't gone deep enough to see if it lines up to the severity of the recession. But one of the longer recessions we had was after the tech bubble, and it wasn't as deep an inversion. I'm sorry, was after the great financial crisis, and it wasn't as deep an inversion as the tech bubble. The tech bubble recession wasn't very long at all. So,
I have
as a,
not found a correlation between the depth and
no, I haven't either.
severity.
I haven't either. Although I think it's safe to say that the one head fake we have in the last 11 inversions was in '98, and that was a blip below. So,
what was interesting, that was also coming off the currency crisis with Russia and
right,
Asia.
Brazil and
Yeah, and the long term capital management, smartest
yep,
boys in the
see,
room,
yeah,
blowing sky high. So that's, that was, you had other things that were really messing with the yield curve, because especially long term
yeah,
capital management. Uh, I'm sorry, I just have to laugh. You know what? When the market, once you think you're smarter than the market will just hand you
yeah.
exactly what's coming. You know, so no, I don't have. Well, I don't have the 210s back to 29. I don't know the official date of how far we can go back.
Mm, I have a chart in front of me that goes back to 59, but that's the biggest. That's the most I've found. Um, I don't know who tracked it. There was an inversion in 66. There was another inversion in like, you can't really say when this is, but it looks like it's about 68, 69. Another one in 70. I'm sorry, in 72, 73. Um, Another one in 79, 80. And then we get to what we already have, which was the 89. But I tell you what, these look, dude, the 1979-80 inversion, according to this chart, this is from Sunshine Profits. So I don't know if it's, I don't know if that's accurate or not. It went to negative 320 or 350, according to this.
Uh,
I don't know. I don't feel
the
like that's accurate.
350 basis points to twos tens.
Yeah.
I don't know. Let's see. What am I expecting the market to go up in the morning? We'll take a
What?
look at the markets in a bit after Bob. What's the time? This is a good question for Michael. What's the time frame from reversion to the one? You want the sort of the time frame from crossing back to zero level, or from the lows to the 1.5? Let's just take a look at that's actually a pretty good question. So let's just take a look at a couple different things. So this is the monthly chart from the lows back in 89. We'll just go to one roughly around the 1.5 level. Was uh that was 883 days, and from where it crossed zero, I'll give it the final cross of zero. The final cross of zero to the 1.5 level was roughly about 426 days. In the let's go
These
the
are
tech.
trading days, right, Mike?
Yeah, I don't know how they're measured. I'll have to
I think it's
do.
trading days with that tool.
So this would be from zero, from the tech bubble to 1.5 would be 212 days, and from '07 to 1.5 would be what's 214, 240. So I mean, if that was calendar, I don't even know if this, but you're still looking you're still looking a few months. That's what I'm
Yeah.
saying. We could still see it, and based off of this, I mean, a market can do anything, but based off of historical precedents, we could once this thing bottoms and starts acceleration upward. That's when you generally get these starting the major legs down in the market. So we could get a few months of major leg down. It's not
Mhm.
like it happens. It goes in a few weeks and then it's like, ah, it's done. Now, does it have to repeat exactly? No, but it's. I'd be looking even at the short time of over 200 days. So that's looking like a minimum here. You know, that's why I'm still focused on. I mean, can anything? Yeah, could the Feds go on quantitative easing and massive rate cuts again once the market hit a certain level and short circuit everything? Sure. We don't know though. Thank you, George, for reporting the spam. Yeah, this
So
is.
stupid.
You can't say Coco. You can't say CPI is not important. Jay Powell said PCE more important. Yes, but CPI is. He also said they were watching CPI too.
Yep.
And the market's going to key off of CPI. So
Hmm.
you can't say it's not important. I mean, that's.
Also, so many things are pegged to CPI. There's all kinds of inflation adjusted products, uh, insurance products, pension products, and they're marked to CPI. They're not marked to PCE. So you're acting as if the Fed is the only game in town, and it's the biggest game in town, but it's not the only one. So CPI is very, very important, extremely important.
Yeah, I mean, and then we have PPI, which is not as important as CPI, but people still watch it. And then we have preliminary on Friday. We have the consumer sentiment preliminary, which I think is going to beat just because so many people key off gas prices, even though that's just no, they literally do. It's like, oh, it costs
Yeah.
me less to fill up my car. Inflation's going down because that's the thing
Yep.
that they see most often.
Yep.
So
Everybody,
I'm
I mean,
expecting that to be a beat.
the wage component of Friday's number was so worrying, just generally worrying, because it was up. And wages, again, don't fall. And two things happen when wages go like this: it's either a wage price spiral, or you get the replacement of people with machines in companies that can afford it. So you get unemployment that stems from that.
Well, it's happy times.
There was money before the Fed, Coco. Don't be an idiot. There was money before the Fed.
Fed equals money. Without Fed, there's no money. That so we had no money before what 14?
Federal Reserve Act, 1914. There was no money before that.
There was no money.
No.
So oh boy. Actually, what's more telling in this is look when the gold standard was killed,
Yeah.
and then look at your CPI numbers. So this was CPI prior to the gold standard. Gold standard kills, and look, boom. That's more
Yeah.
telling
Yeah.
than even the Fed. Once you can. Oh boy, I'm not even going to respond to some of this. Lauren says CPI, PPI, CSI. Well, maybe they CSI.
That's funny.
All right, all right. With that, we
Put
will.
up Mike's comment, Mike Jones' comment, if you could,
Uh,
before I go.
obviously, history only looks backwards. That one.
No.
Or the Mike, I saw someone say no bear market is retraced about 50% high to low, and then a bear market
Yeah.
continued. So what if we reclaim 421? I think it's the level that we are in a new bull.
Hmm.
Okay, I don't know those exact stats. My level would be the 62 and a half because that's the stuff I've studied.
So I don't know if that claim is accurate or not. I know that the biggest rally during the tech bubble, bull market, bear market, that largest rally was 45%. We've only rallied about 14 to the high close in the S&P so far. So to rally 50%, yeah, I mean, I could see that being it. But you are not out. I will say this again: you are not out of a bear market until a new high. I corrected Jim Iorio on Twitter today. And he said something to the effect of, I think if we get above 4250, then the bear market's over or something like that. And I said, that's your prediction that the bear market is over, right? Because it's not over. Um, to go up 50% from the lows, well, we're at new highs already. So sure, I'll agree with that. It's not a very bold statement.
Well, to
You're talking
retrace, I think it was to retrace
a
50%.
50% retracement. Okay, hang on. While you talk about something else, I'm going to look at something really
I have the
quick.
50% retracement in the S&P at 42.24.
Okay, hang on. I'm going to go to the Nasdaq monthly and go back to 2001. Okay, because I think we retraced 50% there. The 45% move was from the bottom. Well, here's 2001. I'm looking at the monthly Nasdaq continuous futures.
I don't have the price action on here. See, it did. This retraced 50. It
Yeah,
stalled out before the 62.5 on a closing basis.
right.
But it did retrace above 50.
Well, hang on. Are you measuring it from when the bear market was official or just a rotation there?
No, I'm just measuring the rotation. Because
Well, the bear
retracement
market,
wouldn't be from the.
that's a monthly, right?
Huh?
That's a monthly?
Yeah.
Okay, so the first red bar was down 21.99% from the high on the
Okay.
close. Okay, so that was the bear market, that red bar, that first red bar, which would be designated as April 3rd of 2000.
And it
That one.
retraced more from that bar, it retraced more than 50%.
Yeah. So we already know that's technically not correct. Okay, we have had that happen. Number one. So I would caution you guys from saying since it's never happened, it won't happen. You're not out of a bear market until you get a new all-time high. So that's it. By the way, there was paper and coin money before 1914, Coco. Not just talking about gold.
Where
It
are we
was the
now?
Medici's in Italy that first made paper money. I think that was in the Middle Ages.
Was that before
So
or after Ferraris?
don't even disparage Ferrari while I'm
I
still on.
wasn't. How are you going to buy your Ferrari without paper money?
Now actually there was paper money in I want to say either Japan or China before Christ. So there was paper money. Right, Coco. You just said, "Oh my God, you're saying stupid shit, dude." You just said China invented money, but you said there was no money without the Fed. All right, whatever. I gotta go. I don't have time for stupidity. I gotta go. I'll see you guys later. I'll talk to you guys on CPI tomorrow. All right, and that's that.
All right. All right. See you,
Ted,
Bob.
you're on my good side, Ted. I'm wearing
What?
Ferrari right today.
See, who invented the wheel? Ferrari. There were no wheels before Ferrari.
All right, I gotta go. I'll talk to you later.
All
Cheers.
right. See ya. All right. What'd you miss, Chris? Well, you missed that Ferrari invented everything, including money and the wheel. So, and money was invented to buy a Ferrari. I think that's what we've come up with. So there we have it. We now have the revisionist history from a Italian perspective. All right, this is one for the books. Connor asked, does the NASDAQ close count as a close in the rotation zone? I'm just getting back to, and thank you everybody for reporting. No, it does not count on a daily as a close in the rotation zone. It counts as a close above the rotation zone. And remember, this is why also I stress that the probabilities are slightly lower. I'm not saying they're not valid because they still are substantially above 50%. But they do drop against the daily rotation zone when you're trying to get into it, and we did not close against it yet. Do I know where this is going with the CPI? No. We don't have cycles at the bottom. I could see us still completing some, at least this NASDAQ topping pattern with potentially the CPI number and even a pullback with the PPI, and then consumer sentiment essentially beating and the rotation back up. Now, could we rally it? We're still in go-go juice mode, so could it just rally tomorrow after we've had a nice 3-day pullback in the NASDAQ? We've had a 3-day pullback, but more of a sideways move. If you take this in the macro perspective, yes, I got questioned this the other day. How can you have a sideways correction? Because even on a sideways correction, it pulls back from the highs. Yes, but this is a pullback move. This is a sideways move. Just look at it visually. Don't try to be smarter than, I'm not even going to say the word. All right. So, it's a visual thing. Sideways, pull back. Sideways, and then pull back. You can get sideways corrections. This would be a sideways correction. NASDAQ was more of a pullback correction. Dow, I'd essentially call this a sideways correction because the rotation zone's catching up. Now, if weekly cycles weren't so pinned to the top, you'd have, with the rising rotation zones, you'd have it favoring a break upside, but we still have mismatched cycles, which is concerning. So, what are we watching for overnight? Really, the S&P was only off 30 basis points. The bullish, we start getting above about 41.31. It's essentially I would not be, unless we got momentum bars, be not looking to trade this overnight, even in the European session, because we're still in this huge consolidation chop area. So, but above 30, 41.31, 41.32, it takes us back into this upper consolidation area. The key area, I was watching this 41.20 area. There's a lot of buying pressure there. There's been a lot of buying pressure on any dips right below there. If you did break below there, your next key area is this 41.08 and then 4100. But my major level for the breakdown is 40.89. Even if we pull back on the open, I'm going to be focused on this 40.89, 40.90 level. If we get momentum below there, then we'd still have a gap fill back from the 28th of July. And then I'd be watching a 25% harmonic with the pullback level. And that's not just for tomorrow, that's for the next couple days. To the upside, you start getting back above this 40.30. Then I'm still not going to get overly bullish until we get above 41.63. The NASDAQ, only thing I'm actually going to be watching overnight is to see if we trigger this double around above 13.067, and that's a minor double bottom. And that's just for a little corrective move. 13.114, 13.137, 13.161. You see here on this longer term basis, remember, support resistance is an area. It could not, at least on the 4 hour, did not get a key close below there. 1 hour, barely a close. You can even see the double on that 1 hour. But that just takes us into this upper consolidation area ahead of that. So what am I watching for tomorrow? Depending on where this double takes us back, it would, if it triggers, it would be minor bullish mode up until about 13.159. I can't get into more substantial bullish mode. I'm going to bump this level up about 13,200. We roll over though. See, we still in this double top. Even with this little snapback rally would still favor the lower prices statistically. This is a short-term double for a little higher prices that hasn't even triggered yet, and the longer-term double still is statistically in play, but the key level I'm focusing on is 12,830. If we get a momentum or a major close below that, then we're back into this clear path move, and that's where I'll start focusing on the bottom of the daily rotation zone and a possibly spike to 12,645. Dow key levels 32.6, and then their major level 32.2. We'll glance at that tomorrow. Russell, nice little pullback and bounce off the daily rotation zone. So that's going to be this 1900 is the key level. If we do drop below that, intermediate would be 1880. Major level would be right around 1855. We'll take a look to the upside tomorrow. DAX did, on the closing basis, triggered as double. Yes, it is slightly lower probability because it's against the daily rotation zone. And again, this did not close into the daily rotation zone. But if we get follow-through pressure, that would take us with the double target straight to the bottom of the rotation zone. There you go. Notes. Inside bar today. So after this pullback move, I consider this a 2-bar. Yet Friday was inside bar. Today's an inside bar. So far, 2-bar consolidation. Again, nothing's changed. This 1908 is the breakdown level. The short-term breakout level is 120. Crude could not close into the rotation zone. Got the first reaction above there. There's still nothing going on just yet with crude because we have still cycles rolling up. So beyond something very short term, there's just nothing longer term going on. Gold, again, tried to break out and still closed right at the breakout level. I'll be watching for some follow through to the upside. This would have been a sideways correction with 8 pushes the price, so still favoring the upwards price action there. Silver still watching, coming back to retest the breakout zone, still a target of 21.10 on that. Dollar index still pausing. What's interesting is cycles are back at the top on the daily, but at the bottom on the weekly and still holding the weekly rotation zone. Again, everything's, besides our markets, which have had that substantial rally, everything else is sort of in consolidation at now. VIX, still not much traction, still sitting for multiple days in this, this 21, low 21 to low 22 area, especially Friday and today. So we'll check on that this morning. Bitcoin, key breakdown is 22.6 still. Breakout at this point is 23.8, only for a return to 25. Where else do we sit? Tesla. Hit the stop, filled the gap, hit the first stop reduction from the double, and not quite yet to the second target. Right in front of also that significant level. This should be bumped up a little, but I can probably just take that off at this point. 834, 829 still. The overhead resistance now is about 865, and then 877. Thinking what else? Anything? Where do we sit now? I'm not going to get into this. Let's see. Oh, boy. I generally we get the first retrace. People think it's going back to normal. Now, theoretically, if we do get above some key levels, could we go back? If we get above key levels, I will statistically say we could go back close to the highs. Is it theoretically possible? Yes, but not probable at this point. But then I just based off everything, unless the Fed reverses course, and not just reverses course and pauses with rate hikes, but stops quantitative tightening, we still have a lot more pain in here. Let's see. What's Mike's number one reason why he thinks the market hits new lows again? A, because I have very reliable long-term systems that say that. B, we have not had the flush out move in the what word am I looking for? Jeez, I just blanked out. In the fundamentals. Stuff, even what people are saying bargains aren't bargain fundamentally. People are still paying up way higher than the last peak for fundamentals. So even with this pullback fundamentally, like price to sales, even though it's pulled back, they're still higher than the last market peak. The last time we hit it, the last peak before the correction. Fundamentally and long-term system-wise, we aren't there yet. Can anything happen with a go-go juice market? Yeah, sure. But we haven't even hit remember that 50 to 62 and a half level on my daily chart remember I went over this in Futures Edge. That's between these two red lines with the 200 in the middle. The NASDAQ, that's between these two lines with the 200 in the middle. So could there be more upside before you get to that major rollover level? Yeah. And this is also worth. Remember, market sentiment was incredibly negative, and with this rallies back to neutral zone. If we rallied up to these 200s, it would probably take it into somewhat bullish zone, which would be fantastic because that would be a potentially inverse rollover thing. Mike, back to your thoughts on longer term shrugging off, looking for a rotation back up, back to 21. I'm looking for a rotation back up after after we get some of these reports out of the way this week. What I'd really like to see, I mean, technically on the NASDAQ on a daily, if it just shrugs off everything tomorrow, we're into the rotation zone and you have a potential percent B buy on a close above today's high tomorrow. So that would be a rotation confirmed by a percent B buy for a confirmed play for higher prices on a closing basis tomorrow. Does that mean there couldn't be a front run pattern intraday? No. But then to trigger it, it officially has to be on a close. On the S&P, a close above today's high tomorrow would be a sideways correction with 8 pushing the price with a confirmation percent B buy. And these are the reasons I love these percent B buys. Their Dow, there is nothing. Besides, it would just be a catch-up move. Russell, there is nothing. But you have potential percent B buys for tomorrow. And we can review again tomorrow night. After today, where can we go on the SPY tomorrow? Well, after today, this is still a sideways move. After today, the key areas I'm watching, the breakdown play would be to 408. Then I'd be focused on the gap fill, but more so, and let me reverse these harmonics real quick. Why am I reversing them? Because we've already hit the statistical areas that were called once we close above that 62.5. But they're virtually, this is what I love about the harmonics, as long as it's close, it's going to give you the same zone. If we pull back the key area, if we break down below this 4,008, I'm going to bump this down just a hair to that open, about 4,750. 403.76 is the bottom of the rotation zone and the gap fill. If we only pull back minorly and we hold this 407.50 area, I'll watch for the reversal move back up. And the SPY, you have a percent B buy on a close above today's high. So you'd need a close above 412.75. For the Qs, the Qs technically triggered a double and just stopped in front of the thing, but the Qs technically have, if you get a daily close, two things to the upside. You get a daily close, it's back into the rotation zone. The Qs pretty much closed right at, maybe slightly negative. And here's something, if I have to squint, and don't get so caught up with, if you have to squint and figure it out if it closed above with the rotation zone, if it closed above or below or at, assume that it closed. Just give it the benefit of the doubt that it didn't close into it if you have to squint. I'd rather give it the bullish benefit. You still have the downward back down to 313.64 and 312.06, and that's the area I'd be focused on with the Qs. Let me raise these. I forgot to raise that. And you see the 25% retracement is right there. So that's the lower thing. You do get the aggressive buy on a close above today's high today's high at 319.03. And then if we start breaking above there to tomorrow, I would be focusing on the gap fill to 320.71. And I have no, I mean, this is a very interesting way. If the Qs, statistically, I'd have to bet we do another push lower, but we're against the rotation zone. That's why it's a very interesting position we're in, because you have so much mismatched stuff. Oh boy. Also, technical question: was there a valid inverse head and shoulders on the Tesla 5 minute? Let 5 minute. Or try to spot them on longer time frames. Was there? I don't know. I didn't even look at the Tesla 5. This inverse. Where? Which one are you talking about? This was a head and shoulders, and it's nice because you're reversing this clean move. This was a head and shoulders, and this was a shoulder, by the way. Was there an inverse? I'm not really. Let me take a look if on a. This is not an inverse. This is too close. This is technically a double. So this is not. This should be traded as a double above this peak. So there's a short term. If you're really down in the weeds at this time frame, there's your little short term potential move if it were to trigger higher tomorrow off the open. That would be a double. I already got that one, Rich. I have it on the 15-minute and the 1 hour. You already see it on the chart. I covered that a little earlier. That's for the overnight price action. Thank you for reporting the love chat, Chris. Thank you, Ted. It just clogs up the stream. We don't need. I mean, I'm sure if people really need to know an adult dating site, they're not going to come to the Path Trading Partners live stream to see that scroll by. If you really need an adult dating site, this is not your destination to start looking for it. Thank you, Patrick. How to spot percent B buys. If you guys want me to release that, I could do it. I'm going to sell it though. I will. If I get enough votes, just give me a Y right now in the chat if you want me to release it. I won't charge a lot for it, but I'll try to record that in the next couple days. It's just I'm so swamped with stuff. I will do it though. If let's see, Roblox. I did not see this. Let's just see if it gets bought. See, this is look. It completes the double. It completes the double, then misses. Double played out in Roblox also. Ooh, that's a big miss. Woo! That's a big miss. Now let's see if we start buying it up for the gap fill play. That will really be telling for the go-go market. What did coin do? Does somebody have the coin numbers? Down a little. Play for the gap fill tomorrow. And then your major support is 75.50. TTD beat. Huh. By the way, that double is not valid, so ignore that. Oh, but if it still opens up and holds the 62.5 and above the 50, it could be a play to that 87.5, 71.51. I'd want it to hold this tomorrow, the 62.5%, and technically I have to update it to there. Let's see what else. All right, I got a yes, a yes, a yes for Amit. I already went over Tesla Sonic Q. You have that little mini double. You have the daily double already triggered. Go back and watch it. I don't want to review that again. NVIDIA. What's interesting here, and NVIDIA, I'm going to be watching for the continued pullback. One set, your key level is this one. I can't see this. 160.12 is your key level. Anywhere in here, you're trading 170 right here. There's nothing. NVIDIA would be hands off, but I'd be watching again. Long term, I'm very bearish still on semis. If you want a reversal move, I have nothing yet, but I'd be watching for a reversal move between 166.65 and 160.12. You get a close below 160.12, you're going statistically back between about 147.07 to the lows. On a daily, if you get a reversal, and that was pretty close to this 50% level. If you're looking for something much more aggressive, you have a percent beat buy on a closing basis above today's high. If you're looking for something more aggressive. And if I was going to play that to the upside, it would just be for a potential gap fill at most. What's interesting is if you bounce up here and if you don't fill the gap, you might form a head and shoulders reversal on the daily. So I'd be watching for that too. FOSL. Then I'm going to wrap it up. Fossil Group. So they have earnings. It's another one I do not trade. Let me just see where from this harmonic, where we ended. Not bad. That wasn't a bad little harmonic area. Fossil Group. I got to get some of this stuff out for you, for everyone here. There's no double. They're reporting earnings tomorrow. But your breakdown play is essentially below about $6. Back, let me see what the retracements. You're sitting there right. Look at that, $6. $6 is 50%. You break below there. If target would be 571, close below 571, and return to the lows. If they beat to the upside, what would I be watching for? Ugh. Where does the most recent swing take us lower? Targets would be to the upside, a return to 720, and then roughly about $8, which would be this prior breakdown zone, broken, retested. So those would be my two upside targets that if I had to use something. And then if you really wanted to fine tune it, use your forward harmonics. And you're at 777 to $8. No, it's not a double, because this extended too far. So what would I, again, just to readdress your question because I didn't see it, I would not trade it as a double using the targets, but essentially you get below the 50% level. This is where it's really handy to use your other harmonics. Target the 62.5 because you got this little support base and you get the 62.5. Then you get a follow through close below there. Favors this. So you still have good downside targets even without it being a double. There's a great comment. Please come back, reload the page, and leave some comments and like. Takes 2 seconds of your time for this great content. Thank you very much, Michael. All right, now we're back to the love chats. You're welcome, Rich. We're back to the love chats. I'm going to call it a day. Could somebody still report that? I just want them to be gone. Ugh. I hope everyone has a fantastic evening. Remember, CPI 1 hour before the open. We'll be on 30 minutes after that. Bob said he'd be on. So if you didn't watch it live, you're watching this on replay, please make sure you tune in tomorrow. And again, follow Michael's comment, and please, we can get some more comments. We can get this good content out. I know it's changed some people's trading perspectives. Maybe not Coco's or Tom Tom's, but other people's. With that, I will talk to everyone later. And I appreciate everybody. Thanks, Rich. Thank you, Michael. I appreciate everybody being here. Even you, Coco, even though you have to give me a hard time. I appreciate everybody tuning in who spends their time with us to learn more about the markets. I will talk to everyone later. Bye for now.